Hello, greetings. Welcome back to the DG5 on Sunday, October 12th. And I'm not making any decisions today. I looked at a couple of charts and there's been quite a few big gaps after Friday's huge move. And I think maybe sit this one out and let the indicators catch up with the price and information. And then take a look at it this Monday afternoon, Monday evening, and see if there's something looks a little bit more appealing on Tuesday. You can see here, this is gold, and it's resuming its upward. It's in congestion. So top of congestion, bottom of congestion. Right now we're up in the upper area of congestion, so this may start to cycle back down, may cycle back up, or it may continue higher. These are all building a wall. So I'm going to wait for a little more information on gold. And this is the S&P 500, and what do we have from 6,800 down to 6,550. Incredible move. We've already gapped up from the close. We're up about 70 points. So I'm gonna sit on my hands on this one and see how this shakes out. And then finally, pretty similar look in crude oil. The thing here is confusing is you have the oncomings moving up after building this wall, but you have price way down here and it's broken through. This is monthly envelope bottom, weekly envelope bottom. So I'll just sit on my hands for this one and wait for a little bit more information. What I would like to do though is take a look at Friday's trade in gold. This was a little tricky. This is the entry target area, and this is a 10-minute chart, 60-minute chart. So this bar got way up above into the target entry area and reversed back and closed back down just at the envelope top. So that would have been the entry bar. And looking at it on the 10-minute, you got a little bit better view. You can see the wall building up here, up above the envelope, reverse back inside the envelope, this bar, and also the airbag holding here. And then this bar is the one it closes. You get the center mark shift up above price. So this is the entry area. And monitoring this trade, at some point you would have gone to break even on your stop. And this is troubling here as the price got. Let me back up for a second. The flow on this bar was very, very good to the downside, closed near the bottom, and it went nowhere and closed back up inside the envelope at the PL dot, up above the PL dot, and then back down below. And at this point, setting on your hands, waiting for a continuation perhaps. But when you get to this point here and this bar here, definitely need to be out of this market. So the trade here would have been somewhere between here and here. So there were a couple of bucks on the table. I'd say about 15, which would have been a really nice trade, $1,500 a contract. And you just had to be a little bit nimble and not such quite a clean, clear setup as we're used to seeing. But it illustrates the value of having the lower time periods showing you where this support, or this, in this case, where this resistance was holding and how price on the 10-minute reacted. That's it for today. I'll take a look on Monday and perhaps we'll have something for Tuesday and then Wednesday for sure. If you have any questions, let me know and we'll talk to you again soon.